Today is the first day of summer. If anybody's watching this in my family, yes, I am wearing sunscreen. How are we all feeling about the real estate market? I can tell you from an agent's perspective, it is changing, I think, faster than any of us had even anticipated, and it's all being driven by the interest rates. I figured I'd just give you a quick summary of the things that I'm seeing in my market. But before we get to that, if you are new to the channel, welcome. My name is Brian. I'm a real estate agent here in the Boston market. And on this channel, we cover all things real estate. All right, let's get into it. Mortgage rates have spiked. They are now up over 6%. When you compare that versus 6 months ago, we were somewhere in the neighborhood of 3%, maybe a little bit more than 3%. We are finally starting to see the signs of a slowing and leveling and potentially correcting market. So let me give you an example. So again, I'm here in the Boston market. My office is located in Waltham. And in Waltham right now, there are 6 times as many homes available for sale as there were just 3 months ago. Think about that, 600% more homes available today. Now, some of that seasonality, but a lot of it isn't. A lot of it is actually homes that are still on the market, that have been on the market for quite some time. To also give you an idea about the days on market, days on market have more than doubled in the past 3 months. They've gone from 9 to over, I think it's 19 days on market. Again, this is just 3 months worth. In addition to that, median listing price has gone down by $100,000. Now there's many variables to that with the types of homes that are being listed, but you get the general idea. And then this is the most surprising one to me, is that in the past roughly 10 days, I think it's 11 days at this point, there have been a total of right around 20, maybe not 20, maybe about 15 single family homes that have come on the market. Again, this is specific to Waltham. Not a single one has actually gone under agreement. Nothing is under contract. 3 months ago, single family home, anything inside 128, gone. If it was halfway decent, it was gone. In some of these houses, they are priced competitively. They are like completely done on the inside. They're move-in condition, yet they are still sitting on the market. The buyers have, it feels like, have literally evaporated overnight. There's a lot of uncertainty in the economy, a lot of uncertainty with what the Fed's going to do, although I don't think so. I think they're pretty clear as to what they're going to do, because inflation continues to rage out of control, and they have to do something to attempt to stop it. So what do? They increase the Fed funds rate, and that just has a ripple effect throughout everything. So borrowing costs are absolutely skyrocketing across the board, not just with mortgage, but for anything. If you need to borrow money, the party is over. So what does this mean? So what this means is it is going to be a very interesting summer. I think typically summer is not a terrible time to list. If you've been following my channel, you will know that I recommended, this is a couple months ago, I recommended that if you are planning on list, do not wait until the summer to list it now. And this was back in April, and list it before Memorial Day. If you did that, you're in great shape. You still had a very strong market and lots of buyers available. But now that has completely changed. There's just not the same number of buyers out there today as there were even just a month ago. So if you are a seller in this market, you 100% need to throw away this estimate. Don't even look at Redfin, and you can't even look at the comps for the homes that sold in your neighborhood within the past 3 months, because it was a completely different time. I know that sounds crazy, but it's true. If you are a buyer, you may want to sit tight for just a little bit longer, because yes, there are homes that are being repriced, but I can guarantee by the time the fall rolls around, any home that has been on the market for any appreciable amount of time, say here in the summer, or things that are being listed actually in the fall, there are going to be some deep discounts to be had on those properties. So unless you find the perfect property for you, might not be a bad idea to sit tight. Now, the risk there is that interest rates continue to go up. They will, but as interest rates go up, there's going to be fewer and fewer buyers available. So everything is relative. So as the interest rates goes up, puts downward pressure on homes, and you could potentially buy a home at a discount and then 3, 4, 5 years down the road, refinance into a lower interest rate. Or do like a 5-1 ARM, right? Where you're getting this introductory rate for the first 5 years. And then at the end of the 5 years, you know, the Dodd-Frank legislation completely changed the rules of what banks can and cannot do. And back in 2008, 2009, when all these 5-1 ARMs or 3-1 ARMs or interest-only loans came to maturity, people got absolutely screwed because their interest rate went from, say, 3% all the way up to 8 or 9% or 10% in some instances. There are now some safeguards in place preventing that from happening. So I think it's your interest rate can only go up over a 12-month period. It can only go up maybe a maximum 1% until it adjusts up to the current market rate. So even then, you'd still have time. Anyways, my point is, if you find something you like and it's a good deal, go for it. However, if you are in no rush, then again, it might behoove you to wait until the fall when prices, I think, are going to be very attractive. Anyways, that's all I have. If you did enjoy this video, make sure that you smash the like button. Also, click the subscribe button down below to be notified of future videos. Thanks for watching. Take care.